everyone, and thank you so much for joining us today for one of our weekly webinars. I'm Sam, and I moderate these weekly webinars for you. In just a second, we're going to be joined by Michael Corgiat. Michael is one of our financial advisors, and he is going to be covering some topics related to long-term care insurance, what it is, and whether or not you should enroll in it in retirement. After his presentation, he will also answer a couple of questions. We apologize in advance if we can't answer everyone's questions. We don't always have the time. We do like to respect your afternoon and get you out quickly. What he does not answer live, we will have another advisor either email you or call you to answer directly with you after the presentation is ended. You will see some links in the throughout the presentation. You'll see some links to our complimentary cash flow analysis as well as our calendars, so you can get directly on one of our advisors' calendars and speak to them about your specific concerns or situation. I encourage you to take advantage of those things. And as a reminder, we are not affiliated nor endorsed whatsoever by any specific company. We are a completely independent group of financial advisors here, so please keep that in mind as you're listening along. And without further ado, let's jump right into the content with Michael Corgiat.
Thanks, Sam, and thank you everyone for joining us today. Long-term care is a very important part of an overall life program, especially a retirement plan, because it's usually going to be in retirement when you and or your spouse might need some assistance. And I'll talk a little bit more about traditional long-term care, as well as the features and benefits of what we like to call asset-based long-term care programs. The definition of long-term care is just that. You need help and or aid for some sort of chronic illness or a disability. As I said, it is a very important piece of your overall retirement plan, simply because there is a very good chance, as you can see here, that you and or your spouse might need some sort of help. And that help, whether it's assisted, in-home assisted help, or an assisted living facility, or true long-term care, which is custodial care type of benefits, it's not cheap. It's very expensive. It can average from more than $100 a day in home to $5,000, $7,000, $8,000, $10,000 a month in a nursing home. So it is a very important piece of the puzzle. Everyone should consider some kind of long-term care. I personally bought a long-term care policy literally almost 30 years ago, and I still have it, and I'm glad I do. The premiums have gone up on it a couple of times, but again, I am very glad that I have that benefit. So keep in mind, it is a very important aspect of your overall retirement plan. Let's talk about the activities of daily living. As you can see here, there are 6 of them: washing or bathing, dressing, feeding yourself, toileting, moving around, and then transferring potentially from a wheelchair into a chair or into bed. ADLs are the most common triggers used by insurance companies before long-term care benefits are going to be paid. And typically, once you cannot do 2 of those ADLs, you will qualify for your long-term care insurance program. And those benefits will begin once typically a waiting period has been satisfied. The traditional long-term care benefits are much like a disability insurance policy that you may remember having when you were working. There is a waiting period, there is a benefit amount, and then there is a benefit period. You would have paid an annual premium. You may have paid it monthly into the policy. For the policy, there was typically no cash value. It was like buying auto or homeowners insurance. If you didn't become disabled, if you don't become, or if you don't have a need for long-term care, those dollars are lost. Whereas in asset-based long-term care, there is a lot more benefits and those funds are not lost. It is less expensive in the traditional form of long-term care. Over the years, I know my policy premium has gone up more than once. These insurance companies have that option, but I do continue to pay for it. So the key differentiation between the two is that it is less expensive, but the dollars that you would spend on it can be lost if you never use the insurance. Let's talk about some of the features again. Dual benefit potential. Should a policyholder not require long-term care benefits, the funds that they have put into the policy would be payable as a death benefit. Those benefits can be fixed or they can be variable, meaning essentially you could have a beginning benefit and then that benefit could be indexed for inflation or some other interest rate factor over your lifetime from the point that you got the policy versus 5 or 10 years from now. And one of the benefits too, as far as asset-based long-term care, and this has really become a much bigger deal these days, is it may allow the beneficiaries to select the caregivers offering more personalized care. And in fact, it could potentially even be a family member that you could choose. If more than likely you're using in-home care, basically you just need a little bit of help and someone's coming to your house to provide that help. Okay, talking about premium structures, asset-based long-term care, it is pricier because you are typically making an upfront investment with either a lump sum dollar amount or you're going to make periodic payments over a period of time. Okay. In other words, you might be considering putting 50, 100,000, possibly $250,000 away into a investment that will allow you to earn interest and potentially allow you to invest in the stock market where you could get stock market returns, both up and down. All right. So it is an asset, much like an annuity. And that asset also provides long-term care benefits. The source of those dollars could obviously come from savings, the sale of a home or the sale of a business, or they can even come from your retirement account. You just have to be careful and make the contributions the right way. Those benefits are typically tax-free. Long-term care benefits are received tax-free. The premiums can be deductible, depending on what your tax situation is like. You have a guarantee of that benefit. So if you never use the coverage, if you never wind up having to any need for long-term care, the money's not lost. When you die, the value of that investment will pass to your beneficiaries. Those funds are not wasted. Okay. And these policies are also available for a husband and a wife. So you could put everything together into one program. Some of the downsides, it is, as I mentioned, higher upfront cost because it is an asset-based investment program that provides long-term care benefits as a part of that overall investment. So it's not, it doesn't make sense for everyone. It may not be suitable for someone who's not insurable. Insurability, it's a big deal. Life insurance, disability insurance, and long-term care insurance, depending on what pre-existing health conditions that you have. Just consider consulting with your financial planner or give us a call. It's a program that can be part of an overall retirement program, and we can help you with a decision-making guide as well as help you to guide you through the process of what makes the most sense for you. So, a recap, a modern approach is the asset-based long-term care. We are doing a lot more of this type of long-term care coverage because it is an asset that's not lost. Premiums that are paid are not lost. And then the dual benefits with the comprehensive coverage, maximizing the value of your contributions, and so on. It does make a lot more sense in most cases for individuals to consider this. It's not, it doesn't make sense for everyone. I always talk about that everyone should have a retirement plan. A lot of Americans don't. Take advantage of one of our free services, which is we're happy to put together a free cash flow analysis for your retirement, and we can include a discussion for long-term care, as well as many other the important aspects of financial retirement and estate planning. We do work with the individuals that work for a lot of Fortune 500 companies. We've got a great deal of experience. I myself have been a financial advisor for more than 30 years. Got a great knowledge of many of the corporate retirement benefit programs and pensions of the companies that we have chosen to work with. So, keep all of that in mind. You could follow us on LinkedIn by scanning this QR code here on the left for updates on future webinars. We publish a lot of different neat articles on our LinkedIn website. Just follow us on LinkedIn. You could schedule a meeting by scanning this QR code here on the left. Schedule a meeting with myself or one of my colleagues. Give our office a call and or scan the QR code on the right again to follow us on LinkedIn. I've said a lot, I could say a lot more about this subject, but I just wanted to try and touch on the highlights. It can be a complex subject, much like retirement planning in general. But again, give us a shout. We'd be happy to talk to you about this opportunity or anything else that might be of importance to you. And with that, I'm going to go ahead and hand the meeting off back to Sam and see if we got any questions.
Thank you, Michael. Yeah, we're just going to answer a couple really quick questions. As a reminder, the link to that cash flow analysis that Michael just mentioned is in the chat. You can take advantage of that, as well as our calendar link where you can make an appointment with Michael or one of his colleagues if you wish. Alrighty, Michael, number one. Which policy, long-term or asset-based, offers better protection against future premium increases?
A great question. And I sort of addressed that during the presentation.
Mm-hmm.
A typical long-term care policy, which is, like I mentioned, like auto or homeowners or disability insurance. Initially, it was thought that the premiums wouldn't go up. But many of the carriers that initially wrote these contracts, and even still today, are realizing that their actuaries didn't price their programs the right way. So guaranteed premiums are a thing of the past in the traditional long-term care policies, where you're just paying a premium for long-term care coverage. In an asset-based plan, the premiums are, in other words, the cost for the long-term care coverage is locked in. You will not see an increase there. Again, keeping in mind you are making a larger commitment with either dollars up front or a larger contribution. You've got an investment that also has long-term care coverage. Hope that helped.
All righty. Yeah, that was clear. All right. Number two, last one. In a traditional long-term care policy, do I lose the money I paid in premiums if I never need care? I know you covered this as well. Go ahead.
I was just going to say, yes, you typically would lose them. Long time ago, and I don't even know if it's still available, there was a return of premium rider that you could include to get your premiums back. Mm-hmm. The ironic part about that is that return of premium rider was very expensive. So in other words, you could be paying $1 for long-term care and $1.30 for long-term care with a return of premium rider. Uh-huh. Okay. So I wasn't a big fan of it years ago. I wouldn't be a big fan of it today, but chances are, if you do, you're not going to put a rider like that on it. So yes, you would lose those dollars.
Alrighty, and as a follow-up to that, Michael, what are the tax advantages of that option?
Again, tax premium payments for long-term care. You can use You could use HSA dollars, healthcare savings account dollars for them. There is a tax deduction for premium contributions. Whether they're either policy. I'm not a tax professional, but I do know that if you do itemize, some of those premiums can be tax deductible, and the benefits are tax-free. So there are a lot of positive tax advantages to long-term care. But again, it is another type of insurance that we're talking about on top of all the other insurances that we've paid for over our lifetimes. I like to say, homeowners insurance. I've had it for 40 plus years on my houses, and knock on wood, I've never really ever had to make a claim. Will I continue to pay for it? Of course I will. You just never know. So again, I hope that helps.
Yeah, definitely. All righty, Michael, thank you. That was all we had for today. We want to thank you all for joining us. We hope that you'll take advantage of that complimentary cash flow analysis and make an appointment with Michael to speak to him directly about your concerns and situation. And we hope to see you on another webinar very soon. Thank you, everyone, for being here. Thank you, Michael. Have a good day.
Thank you, everyone. Have a great day.
Bye-bye.